Good evening. Welcome back to Be Rich. Today, what we saw is record inflation in America, levels since we have not seen since 1982. My good friend Anish Gupta was not even born then, and it is 40 years since America has seen such inflation. American inflation is 7.5% and climbing rapidly. This is after two generations, America is seeing such inflation, and still Jerome Powell has not yet moved. America is the center of the world, and as Uday Kotak said today, if America sneezes, the rest of the world catches cold. Interestingly, as I speak, Shaktikanta Das, the Reserve Bank governor, has tread an independent path. He has said that he will not support growth and he will not increase rates. He claims India's inflation is well under control. Nirmala Sitharaman says inflation is going to be between 3 and 3.5 next year. Indirectly, when she says that will be the deflator for the budget. I am reminded of Erdogan and Turkey. Why? Because there is a theorem in economics which is called the Mundel's impossible trinity, which says only two out of three conditions is possible. You can have an independent monetary policy, you can have free flow of capital. That means you lose control over exchange rate, or you don't take an independent stand in monetary policy and you can control your exchange rate. Or if you have an independent monetary policy, you have to sacrifice free capital flows. But what Shaktikanta does is trying to do is defying logic. What will be the consequences of this? And has Paul missed it, left it too late? Will he be forced to engineer a recession in America? And there is a recession in America. The rest of world is also going to pay the price. To discuss all this with me is my good friend Anish Gupta, who has not seen an American inflation level at 7.5%. Last time when it happened, I was less than 20 years old. So let's take a glance and see as we move to historic times. Anish, what do you think? This is your first experience.
So with the US at such high inflation and US at high inflation, Europe at high inflation, Japan also seeing inflation after many decades, and the developed countries have both given monetary and as well as the governments have given stimulus. Loose monetary policy and stimulus has led to overeating. Whether this is a now many last year the Fed argued that this is transient, but now it is coming to reality. This is no more transient, and still it is boiling, and inflation is going. Wages are also increasing. So what is the reason why developed markets are facing higher inflation, lower interest rates, whereas developing markets like India, Pakistan, Sri Lanka, all other smaller countries are saying no, we need more stimulus. So what will happen is whether the Fed will move interest rates or no. Many were arguing till December only four rate hikes are coming, but now some of the hawkish guys are saying it may go up to 7 or 8. So some are saying 2%. But when inflation is at 7%, will increasing even the Fed rate to 2% help? So what do you think will happen over next 2 years?
Okay. One, Pakistan and Sri Lanka have admitted there is inflation. Pakistan has very high inflation and very high interest rates. The only two countries which are denying inflation are Turkey, which is saying it's only 36%, which is far higher, and our own Shaktikanta Das, because wholesale prices for last 8 months are at 13 to 14%, and retail inflation is at about 5.5. This cannot happen. Wherever you turn around and talk to people, people in India are saying they are feeling prices. And also, we have stopped rising crude. Effects of crude are not yet impacted in India because elections are coming. So, I saw a report from Nomura which said either they have to cut the excise duty or increase petrol prices by 10 if this continues till the last day of the election. It looks like it will continue. So, a 10 rupee increase in fuel price or a sacrifice in revenue to the tune of 10 rupees to a liter is going to hurt the economy badly. For Shaktikanta Das and Nirmala Sitharaman to assume that the oil price is going to be 75 right through the next year when it's already at 92 is foolish. Like I already said, there was a Mundel's impossible trinity, which clearly says because if US is at 2% and I'm going to get dollar plus 2%, why will I invest in India when I get 6%? Nobody will invest because you don't know how much the rupee will depreciate. So all your foreign investors will sell Indian government bonds first. Second, already it's happening since in the last 40 days, FIIs have sold more than $6 billion and taken out the money. But the government has to support this market till LIC IPO is over. And what has happened is this LIC has increased its position in the Nifty stocks by its record positions. While the market has fallen by 2%, the holdings of Nifty in markets has gone up by 2% also. So basically, as the market is falling, LIC is resorting to selective buying to prop up the markets. This cannot continue forever. So the moment LIC is over, 65,000 crores is taken out, market will fall bigger.
So this is on India. But what will US Federal Reserve, ECB do? And when they do, because there are both sides. Some in US Fed say that no, this is still growth, pandemic effects have not gone.
No,
So
no, no,
still
no,
we have
no.
to.
No, that is wrong. They all have now admitted they are way past the pre-pandemic level. And if they're in election in November, if he doesn't act, then Joe Biden can kiss any hope of re-election and any hope of holding on to even Congress. He's going to lose Senate for sure. He will also lose the congressional majority. This is given. So I expect that in the month of March and when the next meeting takes place, they may even increase rates by zero point 0.5. The market has
So,
not.
but will increasing what till what level do you think Fed will go to the
The
rates?
Fed's normal rate is 2.5.
But
Okay.
2.5, but when inflation is 7 and expectations not coming down.
So
So how do you
2.5. So what they will do is, I expect, as an extreme, Bullard said that he is one of the governors of the local Fed bodies. What he said is, we will go for to possibility of going for a double hike on April 1st, zero point 0.5, and do following it up with a double hike in July. Means out of 2.5, they would have administered a shock of 1% by June, and still it does not abate. Then they will go by a series of 0.25 hikes till it comes under 2%. So if it drops to 4, they will wait and see if the drop continues. The Fed's mandate is to keep full employment and to bring it to 2%. So they will keep on jacking rates once in 3 months till it reaches 2%. When it will reach 2%, nobody knows, because if it was only a supply crunch, production should have improved it. But now it has moved to labor markets, which Amazon and the Walmart were saying this 6 months back. People are not simply coming for these wages. So wage inflation has started to come by 0.5% every month. That means cost of production increases. This will feed into the system and more prices will increase. So this is inflationary expectations. You have to crush the expectations of people. If people get entrenched belief that whatever Fed does, the rates are going to go up, then you have to do what Volcker did. But that was Fed keeping quiet for 4 or 5 years. Here the Fed has kept quiet for 1 year. So he had to raise rates up to 20% to crush inflation. Whether it will collapse when it comes by 2.5 or whether he needs to increase it further, we don't know. But if he goes very fast, which he is forced to, he is definitely going to engineer a recession in America in the next 18 months. That may.
So now the central bank globally have caught in a dilemma where if they do what they are supposed to do, so at 7% inflation, by now Fed should have been at 4% to bring it down because
No, there is no way he could have been at 4%. But he should have wound down the stimulus 6 months back. And at least he done two increases now at 1%. If he had done that at the first drop, inflation may not have gone to 7, it may be at 5 or 4.
now since
Because he
we
has delayed the reaction and he's still not moved. He's going to move only in April. And it takes time for it to transmit down the system. So by the time, if he shuts down the stimulus is not yet shut down. Still, Fed is buying bonds. So the Fed has to stop buying bonds, especially mortgage bonds, put a halt to it, increase rates, and sell these bonds which they have bought in the market. If all this will take till September, and still after doing all this it does not increase, he will have to increase it to 3%. But the US short term treasury rate has already moved to 2% yesterday.
no so now since Volcker and now the US government and the financial markets have grown many times, and the leverage on their balance sheets.
So
And
there is no doubt in my mind that business in America is going to suffer somewhere in the next 18 months. Guys who are over leveraged are going to pay the price. Any company which is over leveraged, either in India or in anywhere in the globe, is going to pay the price.
because my
And
if
I'll
my
give you a hint. Whenever Oak Tree Capital is lending somebody money, you can know that he's going to become finished. That's the end. And the guy who has got money from Oak Tree Capital, $1 billion, is our own Anil Agarwal. He is over leveraged. Desperately, he needs some help, right? His parent company is over leveraged in dollars. And one of his copper mines is in liquidation in Zambia.
and
So,
his smelter is not operational in Thoothukudi.
Toothukudi. So somebody like Anil Agarwal, if it goes up by 2.5%, he's dead and buried. There'll be more disruptions in the Chinese property market. Tatas have survived because A, they had TCS, B, steel prices went up and they could deleverage their balance sheet. But they are buying some other NML, some government steel company in Himachal, that is near Odisha, Andhra border. They will find, if they don't deleverage for faster, they could find it difficult. Any company which has a lot of leverage is bound to suffer. You remember in the last cycle, Anil Ambani had borrowed in US dollars and he was predicting that the US dollar will be at 40, 45. The main reason why his company is sunk is not because of the debt he took in India, but is the debt he took as dollars and brought into India,
That is unhedged.
unhedged. If you hedge, then both are same. So he unhedged, it sunk. Syntax sunk because of its
FCCB.
FCCB. So any company which has foreign debt and does not have foreign dollars to back it up is going to suffer.
That is India, but in US.
No, this is not only in India. It's true of all emerging nations. What is happening to Indian companies is happening to Pakistan as a country. Pakistan as a country has $51 billion in loan. How much?
51.
51 billion. Its total reserves is 11 billion. It's not earning either money, capital is not flowing into Pakistan either as debt or equity. So they have issued sovereign debt. And we discussed once, they had to pledge their own highway. That is the state. Sri Lanka needs IMF help. Turkey needs IMF help. We have survived. India has the only case which has survived because Manmohan Singh and Yashwant Sinha before him managed to build a buffer of $500 billion. But even that, if you follow such policies, while the world is tightening, it's not America alone that's tightening. Germany is tightening, England is tightening, New Zealand is tightening, Norway is tightening. The only two countries with normal economy that is opposite to the global views is one is India and the other is Turkey. So not a great company to have. So why I am discussing India again and again is because we are trying to form an independent policy where today it is cheaper for you to take a home loan than for Nirmala Sitharaman to borrow in the market. Those rates are going to climb. RBI has cancelled auctions 3 times. That's why it's come to 6.75. But you cannot cancel it every time that RBI keeps on buying. At some time, RBI has to release it into the market.
So also does that mean India the demand didn't grow as fast as the other developed?
Because where was the incentive? See, how will demand grow? People have to have money to buy, except IT and people who are there in financial markets. Who made money in the last 2 years? 70% of your force is informal sector. Most of the MSMEs have not played. We know school teachers have not been paid properly. Where will demand come from?
So this is a demand problem. So without the stimulus,
India has a serious demand problem and more investment cannot help it. Will you build you're a chartered accountant, will you build a new factory when existing factory has 50% capacity?
No one will.
So steel and aluminum is being exported. No, aluminum has hit a worldwide high. And today I saw Hindalco has made 3,650 crores profits. So all the commodity players are changasi. And IT companies will are now suffering. But long term, they are okay. There will be a recession, there will be a pricing cut, more chance for us to buy IT stock. But in the long term, the rupee depreciates, IT profits will increase. The guys who are going to pay the price are SME, MSME who are heavily leveraged. Thank you for watching Be Rich. I hope you found this interesting. Thank you for watching this video. If you like this video and like the content, kindly share it among your friends and relatives. If you're not subscribed to the channel, please subscribe to my channel. And don't forget to turn on the bell notification. If you want to get notified every time we do an interesting video, the bell notification needs to be on. Thank you once again for watching Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support.